Before I begin today's video, here is a visual example of Jerome Powell.
So us teachers would never ask you students to do anything we wouldn't do ourselves.
Holy crap! What is happening? I didn't know you were...
That's me in the background. All right, ladies and gentlemen, I got another speed run watch list for you. It was one of the worst Jerome Powells I have ever seen, and I've seen a lot of them. I was wrong. I thought today was going to be a small event. A lot of Wall Street did, and the way it played out, Jerome Powell's tricks just did not work, and there was a lot of major contradictions. So I just want to cut right to the point, man. No time wasted. This is why you went down today and why it was so major. It was what the Fed officials were expecting in terms of inflation. Yeah, the dot plot was a little aggressive. Everything shifted hawkishly, but it all boils down to this. You have to answer the question why all of these Fed members are expecting as much upside risk to inflation as when they did when inflation was peaking around 7 to 9%. Actually, when inflation was hitting like 7 to 9%, they were still saying it was transitory. So this time around, I don't know if it's paranoia. I don't know if it's politics, but this right here, alongside what Powell said about the economy and how he felt with that dovishness, the message that it sent to markets, it has people worried about the next step. So that was the real big thing. You got to understand it. We're going to dive into it a little bit more in this video, but also there's a lot of things going on in the market right now, and it's unfortunate because I don't know if you guys remember, I was telling you, all of these things from 2018 and even today, you had a wild move on the VIX. It is bringing back. This was actually one of the biggest daily moves since 2018, and a lot of those movements that we saw around the yen flash crash, they have returned. So like I was telling you guys yesterday, does the market breadth, do you guys remember the amount of consecutive down days? This is the Dow. It's now the worst streak since 1970. Again, remember the advancers and decliners. These are all updated too. These are fresh. You have now hit the largest negative breadth days on record. You have set the record now after all of this. And to just give you one more view, remember I've showed you guys like the VIX structure and going through the VIX futures. Well, if you plotted them all out on a chart, this is how it looked yesterday. You know, people thinking low volatility and that it'll creep up over time. You know, time adds more uncertainty. Yeah, after today, the whole entire curve just switched to fear. This was a terrible move. So like we were talking about yesterday, all of these factors, you know, with the downside decline, did it mean you had to panic? No. But now what we got with Powell, it's adding a little bit more to this. And to give you both sides of the coin, I talked about this today on stream. Even though there has been a bad consecutive streak of negative breadth, if you actually look at the other times in history where this happened, there's only 3 other times where you actually continued to be red. Usually it ended up being bullish. So hopefully you don't freak out and get too crazy, but definitely after Powell today, it is bringing up a lot of creative ideas. People are getting more uncertain. I mean, the Fed just injected pure inflation uncertainty into the market, and now everybody is going to have to battle through the narratives, and we get a little bit more bumpier until the inauguration. So I hope you guys are ready for all of it. Before we get into the plays and all that, I'll wrap it up with 2 more pretty pictures. I don't know if you guys heard people talking about this yesterday. This is the Bank of America Global Fund Manager Survey, and they say that when cash levels go below 4, that's usually when the market tops out. When cash levels are high, that's when you're supposed to buy it. And this was triggered just the other day, and now we're getting all of this reaction. And then here's another one. This is the amount based on the fund manager survey, how overweight that these hedge funds are, meaning they're saying, no, buy cash over bonds, this or that. And well, it's the most on record. So we have a very interesting dynamic. Again, the dollar, that was another big factor. We're going to have to deal with the Trump trade. Again, if you have been watching these videos, and I really encourage you to go back and get educated on them, because some of this stuff isn't new. I mean, I've talked about everything from hard landing to what we're expecting from the Trump trade, and now putting it in that context. Don't forget, you literally had this event, and now the final event's the inauguration. So we'll see where this takes us. But Chad, drop your thumbs up on the video. Make sure you're subscribed, all of that. I got the plays and everything, but run it.
Walking to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, off the bat, you got to let me know if you like the pretty picture segment, but that took 5 minutes. We covered a lot of it, and this is kind of even a little bit of a repeat, but literally today was not good. It was a major surprise how the VIX moved, the market. The Russell was almost down 5%. This was not your typical move. You know, the breadth was one thing, and a lot of these 2018 things are getting bad, and that's why if you go back to that chart I showed you, I mean, the only other time we saw this negative breadth was 2018. Now, it ended up being really good, you know, following up, but like I was saying, I even tweeted it. I'm like, man, I don't like it when the VIX, and I did not like 2018 was crazy, and like I was telling you, I didn't think today was going to be a big move. I thought Powell was going to just coast into the holidays, and the only other time I've seen a bad Christmas, I said this on the watch list, was 2018. So now we will see how this all plays out. I do think Powell really tried to, you know, he said the same thing. It just didn't work considering those inflation expectations and what he said about the economy. It confused a lot of things. So that's really the first big key. And like I'm saying, it's just a major speed bump. I'm not saying this was the top, but it could be one of our final stops ahead of the inauguration. So I'm expecting volatility. Last time, even on Jackson Hole, again, the last time the bonds sold off at any sort of Fed meeting like this or Fed event, it was Jackson Hole, and that's when Powell shifted hawkish. He talked about this being, he fighted it back about saying it's, you know, different than the recalibration, but he later, you know, relented and said, yeah, you know, we don't know what to call it yet, but, you know, it could be a shift. And again, last time that happened 2-3 years ago in Jackson Hole, it caused a major move, but he was not as hawkish this time. It was the Fed expectations, not necessarily just Powell and him saying, yeah, we're going to do this. So this could be one of the final stops, but I'm expecting volatility. Jackson Hole sold off like this. It bounced up a little bit, sold off for a couple of days, and then it eventually led to like one of the most hated rallies. So don't forget about that. But the fact of the matter is that inauguration timeline, this doesn't change it, but now it is introducing a couple of more things now into the mix. So like I'm saying here, the market didn't freak out over the hawkish Fed. It is now freaking out over the Fed expectations, and this thing you're going to have to deal with till the inauguration is now a pause of rates in January. If you remember when Powell started lowering or raising rates, they always have a Fed meeting where they start to change and start to signal it. So even though he cut today and you got that cut, the dot plot was hawkish, but those PCE expectations by the Fed, it was hammering home that hawkishness. And what they're saying is they're putting a January pause on the table. Even if Powell didn't want to say no to rate hikes or pausing, but the market now and over the next month, you're going to watch people argue back and forth with the data, this and that, about the likelihood of a pause in January. But now what is the problem if you pause after doing this odd rate cut? Remember, they started with a panic cut, 50 basis points, and in the last 3 months, you start cutting, and then all of a sudden they're stopping, and now they think inflation is going to return like worse than 2021. I'm telling you, it's very, very odd. And I mean, you could argue that people were already uncertain by Donald Trump, but I think the Fed just introduced way more uncertainty by saying that with their expectations. But the whole problem with this is now, if that's really how they feel and that doesn't change, and the economy, Powell keeps saying the economy is good and the Fed saying inflation is going up, that means the next step is a rate hike. And that's, I'm telling you, I heard people, Ira Jersey of Bloomberg, one guy, I respect him highly, very, very good at the bond market. He knows a lot, but he even said people are talking about rate hikes. And that's because, I mean, again, if you stop one of the cycles, usually the next step is the opposite. If we don't get an emergency cut, and you mean to tell me the Fed thinks inflation is going up and Powell thinks the economy is strong, if we took that as true, bro, your next step is a rate hike. Why would it be anything else? So this is why the market had a tantrum. It's not because it didn't get its rate cut. It was because of those expectations. It's not like this was more hawkish than Jackson Hole, but if you read between the lines, what this implies and the rapid shift from cut to now, people are already talking policy error. This just makes it all the more crazy. And now, if Powell wanted, look at where the market's at. People were complaining how loose things were. Powell definitely, in a weird way, through the Fed and their writing and dot plot, they let you know they're not going to be as easy moving forward. So we'll see where it all plays out. But now, leading into the final key, man, maybe I don't take a holiday. I thought I was going to leave after this Friday. But I told you, if the market got crazy, I'll stay. So I'll do it, man. We'll see how it plays out. But either way, you got a little bit more data on Friday. That might be able to move us a gigantic expiration. We're going to see. And like I've been saying, I think this is a wild event. One of the worst Powells I've seen, just because I'm saying the Powell-Brady didn't work. I thought he was going to be dovish during the presser, and he was, but it was just so clearly contradicting, even with the inflation expectations by everybody on the Fed. It didn't work. And now, this back and forth. It's been a while since Powell has introduced uncertainty. Again, last time we were riding high, Powell shut you down with Jackson Hole. That changed a lot. And again, that was still a volatile moment. So I think that's exactly what we're going to get moving forward, volatility. I don't think this is a death sentence for the market, but now bonds are going to hit 4.5. They're already there. Some people think it'll stop at 4.75. As much as my TLTs would love it, but I don't think it's going to go straight to 5, especially if these narratives keep playing out or something doesn't change. And then the dollar, that's it. There's one more level before you start encroaching on the other high that we hit, and I think it's going to start wrecking things. So will it wreck it and kill us right away? No, but bonds, yields going above 4.5, on their way to 5, dollar breaking out all-time high, all these other currencies going down, easy mode is going to turn off. That's it. We're playing on all-star mode now moving forward. It's not going to be the same ease. Yeah, you got the holidays, one more week left, but till that inauguration and we cool some of this down, unless Powell, the Fed, or they want to change anything dramatically, I would be prepared, where it doesn't mean we die. You're going to get volatility, but the dollar, bonds, and now this situation, just not going to make things easier. So we'll see where it takes us. I hope you're ready for all of it, but now let us get into the plays. So right off the bat, baby, I got a couple of different plays, and I'm going to start with the plays that I did today. XLV and trash small caps. Call it what you want. You can get like 5 different plays from this one right here, but it's simple. If we do keep going down, you're going to get this vol. Again, the levels start to go like 50 points at a time. I think you'll hit them, you'll bounce, you'll go up, you'll go down. So don't fall in love with the direction. Be smart. Make sure you take profits or ghetto spread. Make it free. There's many ways to go about it. But point is, I think that anything that has already been killed, it will go down, but it's going to drop less. The Russell dropped almost 5% today. NASDAQ SPY almost 3%. The healthcare index dropped like 1.5%. For most of the time, it barely moves. So anything that's already going to be killed, it could still go down, but it's already got killed. It's not going to react the same way. The real meat on the bone, what's been lifting you up here, it's going to be those Mag 7 stocks and the other like 250 names in between that were like $20 at the beginning of the year and are going for $200, if you know what I'm saying. So that's where you're going to get that wild action, and we'll see. And it's quite simple. If the Trump trade doesn't die, what little opportunity you're getting from now into the inauguration, if we still react like this to Powell, but the Trump trade still holds up and people don't get too dramatic. If Japan, that's the other thing. I forgot to mention it. Japan tonight. That's it. So if Japan, they're not supposed to hike. If they do, they're going to mess everything up. And I would look for the yen. If not, then that's going to buy us time. But the whole idea is, if we kind of level out and nothing messes with us any more than this, the play might be short Mag 7, then buy the small caps, buy this dip until the inauguration, and then that's our final leg, and then you go from there. But the risk is that this whole trade fails. So if you try to short Mag 7, buy small caps, Mag 7 goes down, you make money on that, but then the small caps die and you actually get like a full liquidation, you're going to get clapped on both sides. But hopefully you're seeing there's a couple of opportunities. You could try to spot the final leg until the inauguration, and then keep in mind that plays that were already killed, they're not going to be as sensitive to this decline. If anything, you might even watch them go up. So don't forget about that. That is play number 1. Then play number 2, Nike and FedEx. These are going to be big earnings in the midst of this tomorrow. We'll see how it plays, and watch tomorrow. Look to see if the volatility of today has made one side lopsided, aka one side is extremely cheap. Otherwise, I think you might have missed it. So why I'm saying this, because remember, I played those Nike and FedEx. You watched the watch list. You were on stream. You should have got them. We were early on it. We played in advance with all these events and everything going on. The Nikes did very well. So did the FedEx, but the puts barely moved. So let's see if this volatility changes any of the premiums, but these earnings plays already went up a lot. That's why I'm like, you're too late. I wouldn't touch it. But if after the volatility today, if it kind of resets those earnings plays, remember, earnings will give that reaction, and that may be an opportunity. So watch out for that. I'm in that, still on both sides of that play. I just reduced some of the exposure. We'll talk about it in a second. And then finally, gold, man. I'm mad. I've been talking about it. I thought gold was going to get a bounce, and I was telling you, I want to get out of it. I need to sell my play. I'm down like $1,000 on an MGC, which is wild because that's a small future, but I've been saying it right from the meeting, right when Powell came out. I was like, I need to sell it. I was like, I'm going to wait for a bounce, and it just never bounced. I wanted to maximize the sell, but the whole point is, I think I have the chart. I was talking about it. I couldn't find it. I showed you one gold chart yesterday. Here it is. Here's the other one. This is the CTAs. So long story short, gold's breaking a certain technical, the 100-day moving average. I don't care about the technicals as much, but these are like the projected based on the positioning of the algorithms and, buy and sell programs. If you breach one of the levels, it triggers this like crazy expected liquidity waterfall of people dumping gold. And remember, selling gold post-Trump trade, I mean, that makes sense. Look at the dollar. So that's why I said I was nervous about it. I was waiting for the bounce. So I got to get out of that. But why I'm showing you this, one, I got to take care of my play. But two, this could also be a short opportunity, a quick one. Don't fall in love with this. Again, this just means you could probably play it. I think that chart in expected flows, that'll take you to like middle of January. And then after that, again, that's inauguration. That might be the reset, and then we go from there and see what happens. So I'm going to be watching that. I also think it's good information, whether you like it or not. I think you can learn something from it. But other than that, the plays that I made today, I started off with Merck. And again, I grabbed March contracts. I'm getting a little bit of time again thinking ahead, but I grabbed MRK March 130s, two of them 20 cents, $40 total investment. And the reason is that MRK, they licensed the Ozempic drug from China. So China play Ozempic. I'm like, I'm going to get me some time in $20. So started with that. They gapped up like 5 to 9%, then they sold off. So I bought it when the stock was break even. I did not pay a premium over. I actually got it cheaper than the day before with some time. So I like that. Then I sold 7 of the 10 Nikes at 65. I made like 50, 60%. And remember, I bought 10 of them. So I spent like $600. I got all my money back. And now I have 3 of these Nikes for free. And then even with that, it technically paid for the puts, but I ended up selling half of the puts because the puts were 1 cent lower while my calls were up like 60%. So I got to lower the risk on the puts, $100 in that now. And then whatever I have remaining, I already got my initial investment on the calls. So depending on how this plays, if I could trim even the puts and get more money back tomorrow, I'll do it. And the goal, get exposure, get the earnings, and make it free, my friend. No risk, Habibi, no risk. And then I made XLV. I did this before Powell because I was telling you this idea. I think the plays that got mollywopped are going to do a lot better. I mean, they already died. So even in this environment, I still believe the same thing after Powell too. So I grabbed some time. I grabbed the 158 XLV, 4 of them, 25 cents, $100 total. And then like a little bit after Powell, after the first dip, and it was already at what was priced in. I was trying to play the one standard deviation. I was like, all right, let me grab a next week. I grabbed 10 of the 145s. Oh, I said 70. Well, I spent 70 total, but I bought them at 7. So they were very cheap too, but I spent $70. So those actually held even though you saw all that decline. Again, sometimes the volatility will keep the spreads or even some of these out the monies up there. But that's all I did. Like I said, sold the Nike, and now tomorrow, right in our plays, the TLTs, man. Again, I'm still in the March 100s. I told you guys about the sell the rip. I just got greedy, but sure enough. And now this going down though, but you got to be careful. Bond plays, although I like them, this could get shaky. And like I'm telling you, although I would love for it to stop at 475, and it is a possibility, it's usually a one-way road, man. It's probably going to hit 5, and that could be more carnage. But if the VIX freaks out and it turns to 2018, that'll save the bonds. Other than that, though, I would be prepared and brace for turbulence. So other than that, Chatadonia, I hope you're ready for all of it. I hope you're locked in, but that is your watch list, ladies and gentlemen. Make sure Hydra Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, don't forget the simplicity of things as you enter into the next dimension. 3D requires all the lines. 1, 2D. Oh, you get what I'm not talking aliens. I'm talking like 3D dimensions. Yeah. Don't forget the simple things. Don't outgrow them. They could always help you, my friend, and you'll be surprised what you could create. But Chad, bring it home. Drink that water. Stay hydrated, healthy, all that good stuff. I'll see you in the morning. And Horna.